Greetings. Welcome to another episode of Brown Girls Are Beautiful, aka Gresh Realty. Right now, we're out showing a property. Okay, now I'm going to just give you a little bit of information on this property because I only have a few minutes to go over it. I want you to kind of see the neighborhood, see what's looking like out here. Okay. Very nice day today. We're in April. Today is April the 6th actually. I just let the clients inside. I like to give them their privacy, let them look through the home, get a feel for the home, not feel like someone has to walk behind them. This property is going where it's listed for 1.079 million. It has had a lot of interest today. They have showings booked up all the way until 7:30 p.m. today. This is on Saturday. There you have very beautiful grass. As you can see, this is a very highly affluent neighborhood. The home is made of brick. Um, you see the oversized covered porch area allows you for a great space for entertainment if you want to sit outside and just have a nice relaxing day. Um, yeah, so this is in Ballantyne. You all 28277 is the zip code here. So I'll go ahead and give you some further information as well. Let me see what I have pulled up here that I can share with you all. This particular property, like I said, is going for 1.079, so just under $1,100 million. So right under 1.1 million, almost 1.1. There are 6 bedrooms in here, 4 bathrooms. It is 4,153 square feet of space, heated living space. It was built in 2011, just for those of you who may be interested. All right. Let's see how long it's been on the market. This one actually went on the market on April the 2nd. Um, the listing was created, I'm sorry, it just went active actually today. They've already had high interest here. Um, I think they tried to sell this. Let me see. They tried to sell it before. All right. So yeah, it's been it went on the market in 2021 as well, but it looks like they took it back off the market. So far this one has just gone active today. Um, what else can I tell you all about this property? Let's see here. Features. Does have an attached garage. You can see the concrete, the driveway. It does have a fireplace, which is lit with gas. I'm going to wait till they come out and then we'll do a walkthrough. Full brick. Full brick with fiber cement is what this beautiful home is made of, you all. It does have a security system in there with the architecture shingle roof. It has a playground. This is part of the community feature. Outdoor pool, recreation area, sidewalks, and street lights all throughout the neighborhood. So that's what this home contains, everyone. And it is in a very ideal, opportune location, which is what drives up the cost and the price. Um, right up the road, you are in a very convenient location, just minutes away from plenty of dining, restaurants, entertainment. It's a really nice area, very high affluent community, you all. So after they come out, I'll take you inside and we'll do a brief walkthrough for those of you who are interested in seeing the inside of the premises. Right now, I'm just showing you the neighborhood, how quiet it is out here, how peaceful, beautiful, nice, well manicured lawns out here, okay? All right, y'all. So I'm signing out until we head on in. You have any questions? So, yeah. All right, everyone. And as I take you through this home, I just want to explain something called the assumable mortgage. Many of you may or may not have heard of this term, but this is something that can be very helpful and advantageous to you in today's market. So, for the buyers out there, buyers today are being quoted higher mortgage rates. As we all know, from 2020 to 2022, mortgage rates were pretty on the low end. And it started to increase going into 2023. Now we're into 2024. Mortgage rates are teeter-tottering around 7.65%. And depending upon your credit score, it could go a little higher. So this is actually decreasing the size or amount of house that a person can buy. So assumable mortgages has been around for a few decades since the market experienced this type of change. Many brokers or realtors that practice real estate today have never handled these types of transactions that involves the possibility of assumption of a loan. There can be lots of complexity and pitfalls in this type of transaction, so we're going to actually examine a few of those. Buyers are often perplexed about how to afford a property when rising interest rates are paired with rising property prices, and that's what a lot of home buyers are experiencing in these current times. So, therefore, brokers should be knowledgeable about various loan products to ensure that they are able to effectively assist their clients during the transaction. Assumable mortgages can be one of the options that buyers may consider to finance their property. So if a prospective buyer inquires about obtaining an assumable mortgage, a broker should recommend a competent mortgage lender to thoroughly explain the pros and cons of this financing option. If a prospective buyer inquires about buying a property by assuming the seller's mortgage, a buyer agent should be able to explain the basics of assuming a mortgage, but most not act as if they are a mortgage lender. You cannot act as if you are a mortgage lender. Listing agents can provide the prospective buyer the lender's information under the direction of the seller. However, the prospective buyer must speak with the lender regarding the specific requirements to assume the loan. So basically, what this means is that if you are looking at a home that is already pre-built, you are not looking at new construction. These are for already homes that have been already built. You're the second owner, third owner, fourth, fifth, whatever have you. You can actually assume the mortgage of that current seller, whomever is selling that property. If they had a lower interest rate from 2011, 2012, 2015, you can actually assume their mortgage. Okay? And this helps because back then, the mortgage rates may have been lower than what they are now. This can be more advantageous for you as a buyer, okay? According to mortgage lenders, an assumable mortgage allows a buyer to assume the rate, repayment period, current principal balance, and other terms of the seller's existing mortgage instead of obtaining a new mortgage. A buyer may choose this option if a seller has a lower interest rate, like I just explained, than the current market's interest rate, and if the seller's mortgage is assumable. All right. Furthermore, the seller must be willing for their loan to be assumed, since they may retain some obligations for the assumed loan. Although assumable mortgages may be an attractive option for some buyers, not all mortgages are assumable. For example, most conventional mortgages are not assumable because they generally have a due on sale clause in the mortgage contract. However, a prospective buyer may be able to assume the following types of loans if they meet certain requirements, and we will go ahead and examine those. So just a moment, stay tuned, you all. FHA loans, which are Federal Housing Administration loans, VA loans, which are Department of Veteran Affairs loans, and United States Department of Agriculture, USDA loans, everyone. In an effort to educate and assist prospective buyers with information on assumable mortgages, it is important for brokers to know the specific requirements for each basic loan product and educate their client prior to the buyer determining that assumption of the seller's mortgage would be in their best interest. Now let's discuss the requirements of each of these aforementioned loans. Okay, so we're going to go over the FHA loan, which is a very popular loan, especially if you are a first-time home buyer. Under the HUD Reform Act of 1989, mortgages closed on or after December 15th, 1989 require credit qualification of those borrowers wishing to assume the mortgage. This creditworthiness review requirement applies to both borrowers who take title to a property subject to the seller's mortgage without assuming personal liability for the debt and assume and agree to pay the seller's existing mortgage on the property, right? So you must take title to the property. You would be subject to the seller's mortgage without assuming personal liability for the debt. FHA loans are usually considered very attractive for the loan products due to the fact the possibility of assuming a seller's mortgage, lower down payment options, and the ability to secure financing with less than perfect credit. So please note that brokers should recommend that prospective buyers speak with a lender to determine their specific requirements for mortgage assumption. And as I always say, if you are paired with a reputable realtor that has your best interest at the forefront, which is one of the fiduciary duties that are obliged to you as a buyer or a seller, then you would be prepared. You would be paired with a loan or lender that can look over the terms of the loan for you. Now let's look over the terms of the Department of Veteran Affairs loans, okay? VA loans, which I always say are some of the most advantageous loans in my opinion, are loans backed by the Department of Veteran Affairs. This type of loan assumption is available to anyone, okay? Please make note of that. However, only military members and veterans can originate this type of loan, meaning that they're the only ones that can actually take on the initial loan. But if you want to assume the loan and adhere to their terms and conditions by taking over the loan, then you may, and you do not have to be a veteran. All right. A buyer who is not a qualified current or former military service member cannot originate a VA loan, but they can still apply for a VA loan assumption. Be aware that a VA loan assumption is subject to approval by the Department of Veteran Affairs and the original lender. So you have to actually be reviewed by the Department of Veteran Affairs, okay, and the original lender. All VA loans originated on or after March 1st, 1988 may be sold to a buyer if the buyer agrees to assume the loan and the lender or the VA approves the creditworthiness of the buyer. If the buyer is creditworthy and assumes the liability to the lender or the VA, the seller will be released from further liability on the loan. Okay? According to the article Rights of VA Loan Borrowers, the Department of Veteran Affairs states if the seller does not get the permission of the lender/VA prior to the buyer assuming the mortgage may become immediately due and payable. The seller will not be able to get another VA loan with their entitlement until the property is sold and the loan is paid in full, or the buyer is a veteran and can qualify for a substitution of entitlement. An entitlement is defined as the amount a veteran may have available for a guarantee on a VA loan. Please note, sellers with VA loans need to obtain a release of liability if a buyer assumes their mortgage after closing. This release of liability should be provided to the Department of Veteran Affairs to reinstate the seller's entitlement of their military benefits. So this actually allows that veteran to go ahead and apply for another VA loan if they wish to use those benefits again. Now let's look at the USDA, which is the United States Department of Agriculture loan. A USDA loan is assumable, but a buyer must have a minimum credit score of 620. Also, income limits and location requirements must be met. Once a buyer assumes a USDA loan, their mortgage will usually have new rates, new terms, unless the mortgage is transferred to a family member of the original borrower. If the transfer is to a family member, the rate and terms may be the same without the buyer family member having to meet eligibility requirements. All right. So there is someone that actually did this. They actually took or assumed the loan of their parents to stop their parents from losing their home. All right. And so there are very, very creative ways, creative financing ways that take place of, securing home ownership for you all out there. If you have any questions about what I've gone over, please feel free to contact me, your real estate queen, at 980-428-2333. All right, I will go over more about the assumable loans in another video. I hope this has been some useful information for you. And as always, please be the CEO of your financial future, creating economic ownership. All right, until next time, you all take care.